Good morning, Suprabhatam. Welcome to this fortnightly market outlook webinar. I'm Devarsh. I'm joined by my two colleagues, Nagaraj and Nandish. Good morning, Nagaraj.
Hi, good morning, Devarsh and everyone. Welcome to Fortnightly Market Outlook webinar.
How are you doing, Nandish?
I am fine, Devarsh bhai. Good morning, friends. Welcome to this webinar.
Okay. So without further ado, we'll start with this webinar. The important thing is that the geopolitical tensions have been rising now. My screen is visible, correct? Can anybody confirm?
Yes. Yes.
Yeah. So the geopolitical concerns are now rising, and that is leading to a lot of volatility in the market. Sometimes we get the news that there is an attack, then there is a rebuttal, then there is a counter attack and rebuttal. All these are going to be featured till this conflict is died down. They have been going on for many years and they may continue for years, but obviously the intensity keep on changing. Second more important key drivers for market volatility has been the higher for longer interest rate regime. The data which is coming out of the US economic sphere is suggesting that the interest rates are going to remain longer. At least now market is expecting that there will not be any cut till June. After June, there could be a first interest rate cut. So the US Treasury yields have started inching back towards the 5% mark. And obviously the election in India is also going to plays an important role. The first round of elections have happened, and it is going to be a 1 month long affair. A lot of data, how many seats the ruling coalition will win, that will keep coming out. There will be different exit polls, and that will have an impact on the markets. And fourth important topic or the key drivers is the earnings season in India and in US. The outlook, the quarterly results are now till now are above the market expectation, but the outlook the companies are offering are softer than expected. That means they are not that gung-ho about the next quarter, and that is having impact on the American markets. The S&P 500 is closed lower for the third straight week, and the Nasdaq has closed lower for the fourth straight week. S&P is down about 5.5% from its high. Nasdaq is down about 7% from its high. So as you can see from the screen, the most of the markets, as seen here, are into correction mode. Nasdaq, S&P, and Nikkei are about 7% down over the last 1 month, and same is the correction over the last fortnight. So this is last fortnight, 19 April to 5 April, and this is last 1 month, 19 April to 19th March. Compared to that, our markets have been resilient. Compared to 4 to 5% correction, we have down about 1.5 to 2%. Small cap have outperformed like anything. Similarly, the over the last 1 month, 4 to 5% fall. Here we have seen that the markets are up 1.5%. And look at this number. Compared to 5 to 7% downfall in global markets, our mid cap and small cap are up about 6 to 11%. This last 1 month have been phenomenal, and recently they have seen a lot of resilience. Even if Sensex and Nifty has corrected, they have been able to hold their forte. That means that they have already outperformed a lot, and it is important to keep focus back to Sensex and Nifty. Be a little cautious on mid cap and small cap. Short covering is the name of the game. FNO stocks are going to be in limelight. Sector wise, as we have been pointed out, metals have been the star performer, real estate and power, while IT and FMCG have been underperformer, and this is likely to continue. We may not see much difference here. What about foreign institutional investors? They have stepped up their buying lately, but still not as fast as earlier they were doing. What has been the big change? Big change is the change in the trend of Bloomberg commodities. So commodities have bottomed out and commodities have started rising, and metals are the sector which is going to be in limelight for this year. So we continue to like metals. Now I will hand it over to Nagaraj. Nagaraj will talk to us about the how markets are looking from technical charts perspective. Over to you, Nagaraj.
Thank you, Devarsh. Is my screen visible?
Yes.
Okay. Friends, yes, welcome to this fortnightly market outlook. We will discuss the market. We have seen, friends, how the markets panned out in the last couple of sessions. We have seen a sharp decline from the higher levels and sharp upside recovery from the lower levels. We will closely look at the charts from the smaller to larger time frame. We'll look at the broader indices, look at the sectors, and we'll discuss how the things pan out for the next week. Whether we are going to outperform the broader market, we are going to outperform the global peers, or how the chart pattern is looking. Let's start one by one without wasting any time. This is an intraday time frame chart, friends. What this chart is suggesting is the market has shown some volatile movement in the last. This is circle line. This is indicating last 2 days of volatile movement. This is the intraday 60-minute chart, and chartically we have seen sharp decline, as I mentioned, and a sharp upside recovery. Such kind of, normally technically we believe certain things, that market behaves at certain periods, certain times, and certain levels indicate certain things to going to happen. On this front, whenever on technically we believe after a sustained decline for some time, this kind of volatility, this kind of a rise, this kind of a fall from the higher levels indicates there is something cooking on the market. At the lower levels, we believe there is a possibility of short-term bottom reversal. Currently, the Nifty on the 60-minute chart placed at the hurdle. This is a downsloping trend line, friends. We can see last time also it has touched the trend line on Thursday. Again, Friday is touching the trend line. The difference between the two, this thing is that Friday it has declined from those areas, and this today and on Friday it has Thursday it has declined. Friday it is making an attempt of upside breakout. Technically, we believe this area around 22 150 odd levels, 150 170 odd levels is going to be strong resistance. On the intraday time frame charts, a move above this area around 22 150 170 levels is likely to open good upside momentum as per the intraday time frame chart pattern. So this is daily. What we can observe in the daily is that the Nifty has been in a continuous uptrend over the last few months. We have seen higher tops and bottoms. We have seen formation of channel. These black lines are the channels that market is hovering within the channel over the last 3-4 months. And in the past also, we have seen whenever the market reached at the lower end of the channel during this time, and market has bounced back towards the upper channel. This is the characteristic of the channel. Whenever the market, whatever the underlying moves within a channel, it more often respects the upper and lower end of the channel. What happened this time? Exactly, we can see in a circle line. Yesterday on Friday, market moved below the channel line. Around the channel support was around 22,000. It moved below the channel line, made a low of 21,775 levels, and bounced back sharply. This is something indicating and technically that it is alerting me that this pattern may be an indication that it is going to be a bad trap kind of a thing. Whenever this channel respects, after violation of this channel, there is a higher possibility of this upside momentum to take place. But look at the pattern also. We have seen a long bull candle pattern, and technically this pattern is considered as a bullish piercing line pattern. Piercing line happens after the reasonable decline. It opens at the lower levels, closes above the halfway of the previous negative candle. Exactly what happened yesterday. Yesterday, it has opened at the lower levels, recovered sharply, and this was the red candle, was the previous candle of Thursday. It has closed a 50% above the previous candle. These chart patterns are indicating that something is cooking on the market. I think it looks like the short-term bottom reversal seems to have formed up, but that is not confirmed. We have to be very sure, because in pattern tend to fail, pattern likely to form, tend to fail, tend to succeed. We need any pattern. When it forms, we need the confirmation of the pattern. Yesterday, we have seen market showing a couple of indications that it has falsely broken below the channel line, recovered, and formed a piercing line pattern. But for that confirmation, for the bullish bias of this pattern, we need a confirmation in terms of good upside momentum 100, 150, Nifty 150, 200 points. Nifty moves above from here onwards on Monday or Tuesday, then this bullish reversal pattern is expected to confirm, and we could firmly say that we are headed higher in the next week or next fortnightly. This is something what happening in the market. And on the weekly time frame, friends, this is the weekly chart. What we can observe on the weekly chart is the weekly 10 and 20 EMA has been in a force, has been offering support for the market. Purple dark blue color is the 10 EMA, 10-week EMA, green color is the 20-week EMA. What we have seen in the previously except last week, we have seen the market was continuously taking support on the 10-week EMA. This is the area. Suddenly, we have seen the drop in this week, and market has taken the support of 20-week EMA. As per chartically, long-term charts remains intact. This time frame, this framework is suggesting long-term. As per the long-term, market remains intact. Market is taking important supports, long-term supports. The last time we had seen support few months back, 3-4 months back, market has made a bottom reversal at the lower levels and taken a support of 10 and 20-week EMA and continuously moved up from there on. And this is a time now market is showing volatility and showing downward correction from the higher levels. Again, yesterday on Friday, in fact, this week has taken a support of 20-week EMA. This is positive indication on the long-term chart as well, but we have seen some good amount of upside recovery. This long lower shadow is indicating good amount of upside recovery, but here also we confirm, we need confirmation. Once we get a confirmation, there is a possibility of further upside. We can open, we'll discuss later on what would be the upside target and what would be the potential of this party target in the higher levels. So this is the weekly. We have seen some good amount of downward correction, market recovery. A small negative candle was formed with long lower shadow. Long lower shadow at the support, at the important support, always be important for the market. Second, this is the bank Nifty. Friends, this is the bank Nifty of weekly time frame chart. What we can observe in the bank Nifty on the weekly chart, this bank Nifty banking sector has been in a continuous support over the last 7-8 months. This is the dotted trend line has been offering support 1, 2, 3, 4, 5, 6, 7 times, has been continuously declining towards the support, bouncing back from the support, declining from the, towards the support, bouncing back reasonably from the support. Last 3-4 occasion in the last couple of months, it has made same thing. This week also similar kind of a pattern has happened in the banking sector as well. We can see the reasonable negative candle with long lower shadow at the trend line support, which is indicating the history repeated again. The similar kind of a thing has repeated again at the lower levels, around 47,000 odd levels. The banking sector, Bank Nifty has taken a support and bounced back. As happened in the past, we have seen in the past that banking sector has taken a support and bounced back. Will this happen this time too? Technically, we say we are hopeful on that banking sector to move up from the lower levels. There is a possibility. I say, believe friends, there is a possibility of a good upside bounce, provided we have to see some confirmation. On the Friday, we have seen the pattern building up. We haven't seen the confirmation. On Monday, Tuesday, with a good amount of up move, we will see the confirmation, and we can gauge that banking sector is also going to move up in the coming weeks. Mid-cap 100 weekly charts. Friends, we have seen some amazing movement, amazing rallies in the mid and small cap segments. This is a weekly chart of mid-cap. What we have seen in the mid-cap is a sharp decline. 1 month ago, 1.5 months ago, we have seen some sharp decline in the mid-cap, and the same way it has bounced back. This is a strength. The juice is very strong in this mid-cap, small cap sectors. However, it has declined sharply, but at the same pace, at the same way, it has bounced back and made a new all-time highs in mid-caps. Currently showing minor declines placed at the 10-week EMA. Here also we can observe the long trend line support and the weekly 10 and 20 EMA supports for the mid-cap charts, which is indicating that this circle line is indicating that this area is going to be a strong support. And as happened in the past, whatever the decline towards the support is going to be a buying dips opportunity. We have seen buying opportunity in mid-cap a few weeks back, and this time also market, this mid-cap is showing correction, and we are expecting this is going to be a buy on dips opportunity for mid-cap. We have to wait for the confirmation. When the confirmation comes, we will see that overall things chart pattern will be clear on an uptrend basis. This is a small cap 100 of the weekly chart. Small cap was resilient compared to it. In fact, was outperforming the mid cap this week, and we have seen similar kind of a thing, gyroscopy kind of a thing in the both mid and small caps as per the weekly time frame. The 10 weekly 10 and 20 EMA has been holding the support over the last 3-4 months. Recently, this 20 EMA, the green line, has been broken on the downside, but immediately this mid cap, small cap has bounced back sharply. However, the decline, the way it has declined, in the similar way, it has bounced back sharply. Currently placed near the all-time highs, showing minor downward correction. This is better placed. I think compared to these mid and small cap segments, I think small cap is better placed at the support and showing some kind of a outperformance compared to the mid cap. So similar kind of a thing is happening, placed at the lower support, and any dips is going to be a buying opportunity, and the pattern is forming on the small and larger time frame, and once that it confirms, we are likely to see upside momentum. So friends, this is the pattern we have seen in the market from the smaller time frame to larger time frame. What we can observe, the short-term uptrend has been a reverse. The short-term trend has been reversed. We have seen some continuous downtrend over the last 6-7 sessions, 5-6 sessions. Market seems to have made a bottom reversal around 21,750, 770 odd levels, has bounced back from the levels. There was a pattern. We have seen a few technical developments on the daily and weekly time frame. Bullish piercing pattern was formed. As I mentioned, technically, whenever such piercing pattern forms after a reasonable decline, and that alerts to make a comeback for the bulls. So we have to be alert when the pattern confirmation comes. We have to go long in that. False downside breakout of the ascending channel. On the daily, we have seen the channel. The Nifty has shown a false downside breakout of the channel and moved up, which is a good pattern. And third one, a double bottom type pattern. Previously, we have seen 21,710 market was made a bottom. After that, it has bounced back, and 22,750 has been formed in the register at the new all-time highs. Again, yesterday, we have seen Nifty forming the low of 21,775 levels, bounce back from the lower levels. So previous 21,710 and yesterday's 21,775 levels is indicating that there is a formation of some double bottom kind of a pattern or slightly higher bottom kind of a pattern. So this is 2-3 indications are building up and suggesting that there is a possibility of market. Though market is in a broader range, at the lower levels, there is a strong support, and at the higher levels, there are the resistance. From confirmation upside from here onwards could open the next upside target of 22,500 levels. There is a strong resistance of 22,500. We have seen market forming with the gap down. That gap comes around 22,500. That is going to be a strong support. But friends, technically, we believe once the base is formed, once the bottom reversal gets confirmed, then this 22,500 is going to be taken out easily on the lower levels. In case if market moves up and the breaks above 22,500 levels, the next upside would come in around 22,750, 800 level, which is going to be a new all-time highs. Provided certain hurdles are there, we need a confirmation of the reversal. Certain hurdles are there. Once it breaks 22,500, then only the next 22,750 would come in. Friends, there are patterns, we have seen patterns, but we have to be careful about the market at the support. Crucial support is 21,750. All the long positions for us, it has to be placed a stop loss at 21,750. In case pattern failed, then we have to be very nimble-footed to change our trend, because once it breaks above 750, 21,750, which is an important bottom reversal as of now, we have to change the trend. Till then, there is a pattern build-up, and we want to see the confirmation. Once it confirmation, 22,500 and 22,750 is going to be the next upside target for the market Nifty. Bank Nifty has bounced back. Similar kind of a pattern was formed in the Bank Nifty as well. Bounced back from the lower levels. Now the next upside levels to be watched is around 48,500 levels. And friends, remember the 47,000 is good support. One needs to be placed an important stop loss, crucial stop loss for the long positions in Bank Nifty, banking stocks at the sector level around 47,000, which is going to be a strong support for the banking sector. Friends, mid cap and small cap placed at the 10-week EMA, as we have discussed, buying opportunity is emerging, and we have seen the long-term charts of mid and small cap is positive. Whatever the decline from the here on is going to be the buy and dips opportunity, as happened in the past. So we have to be look for the buying opportunity from here on, or from the dips in the mid and small cap segments with the appropriate stop loss in the coming week. Friends, sectorally, banking, PSU banking, financial, automobile, metal, and media are expected to outperform. There is no clarity in IT. We have seen some good amount of upside recovery in IT. There is a possibility of bottom reversal. The pattern will get confirmed over the period of time. And healthcare, Nifty, pharma are looking slightly consolidated, looking slightly weak. Friend, this is all from my side, and I would like to hand over this session to my colleague, Mr. Nandish, will speak about the Nifty in terms of derivative segment, how the derivatives indicators are planned out. Over to Nandish. Over to you.
Okay, thank you, Nagaraj, for the wonderful presentation. Now I will share how the market is looking from the derivative side. Is my screen visible, Nagaraj?
Yes, it is visible. You can go ahead.
Okay.
Nandish, you can go ahead.
Yes.
The screen is visible.
Yes. So first of all, during the week, we all know we have seen sharply higher volatility. Market fell sharply till Friday morning and then recovered sharply. So during this week, if you were to see the data, we have seen short build-up where open has risen by 20% in the Nifty, with Nifty falling by 1.65% during the week. However, we have seen first sight of short covering on Friday, where we have seen 2% fall in open interest in the Nifty futures, with Nifty rising more than 350 points from the low, and finally ended the day with the gain of 0.7%. So during the week we have added 20%, but on Friday we have seen 2% cut in the open interest. So we expect that there is a lot of short in the system, and we might see a short covering in the coming days. That's what the Nifty future open interest data is indicating. Now coming to Bank Nifty. Bank Nifty, as Nagaraj has discussed, it was it was showing relative strength, and that also is visible in the data. During the week, we have seen 5% fall in the open interest in the Bank Nifty, with Bank Nifty on Friday recovered more than 1,000 points from the low, and ended the day with the gain of 1.1%. So as of now, Bank Nifty is better placed technically also, and derivative side also, and we expect this short covering to continue in Bank Nifty also. Now coming the option data, so there is a most interesting data. Put call ratio, which was at 0.93 levels on Thursday, it moved up to 1.03 levels. So though Nifty recovered sharply, that put call ratio is still not at overbought or oversold levels. It is around 1, so there is more room for it to rise. And in the options, we have seen aggressive put writing at 22,000 levels, followed by 21,800 levels. That indicates that around 21,800 level to act as a very strong support for the coming expiry week. Nifty expiry is on 25th April. So for next 4 days, this level of 21,800 is likely to act as a very strong support. On the other hand, we have seen call writing at 22,500 levels. That is likely to act as a resistance. So this you can see from the option distribution chart. We have seen sharp addition in open interest in 22,000 put level, followed by 21,800 levels. So this range of 21,800 to 22,000 levels is likely to act as a strong support for the coming days, while 22,500 is the level where we have seen highest open interest in the nearest strikes. So that is likely to act as a resistance for the coming days. FI, so the sharp fall in market from 22,800 level is on back of FI selling, both in cash and derivative, and that is why if you were to see the data of this week, the net sold worth rupees 13,000 crore, over 13,000 crore in the index future segment, with their open interest going up by 68,000 contracts. So FIs is the one they have created aggressive shorts in the index future during the week, and that's why their long to short ratio fell to 0.55 from 1.27 levels last week. So from long, they have become aggressive shorts in the index futures. However, on Friday, they have created fresh longs. So from lower levels, they have actually created fresh longs on Friday, as the net bought worth to be 660 crore, with their open interest going up by 45,000 contracts. So FI's long to short ratio moved up sharply, moved up slightly on Friday, but it is still around 0.55 levels. So this in turn indicates that FIs are still net short, and if Nifty were to rise from here, we might see a sharp short covering from their side, which could which could give support to the market. So I think we believe that because of FI short covering also, we may see some upside in the Nifty and Bank Nifty. So you can see from this chart, FI's long to short ratio was 1.27 during last Friday. It fell sharply to 0.48 on Thursday, and it recovered a bit to 0.55 levels on Friday. So still they are net short, and we expect short covering from their side. So coming to outlook, first sign of short covering in Nifty futures on Friday. After we have seen overall short build up, but on Friday we have seen first sign of short covering in Nifty futures. Put call ratio has risen on back of put writing at 22,000 and 21,800 levels. Long build up by FIs, first sign of long build up by FIs on Friday. And FI's long to short ratio still below 1. This indicates more short covering. We believe that downside is limited in the market. Nifty has already corrected 1,000 points from the all-time high and recovered on Friday. We believe that this pullback rally is likely to continue. That is what the data is suggesting. So our advice is to accumulate longs with stop loss of 21,800 levels in future. In cash, you can keep a stop loss of 21,750 levels. On the higher side, we advise profit booking at around 22,400 levels, because on higher side we have seen aggressive call writing at 22,500 levels. So broadly speaking, as of now, we are in the range of 21,150 to 22,500 levels. Bias is slightly positive. So with that stop loss of 21,750 level, one could initiate longs, but around 22,500 levels, one should book profit to re-enter at lower levels. Among the sectors, auto and metal, these are the two sectors where we have seen long build up in the derivative side. So these two sectors one should look at for creating long positions. Coming to Bank Nifty, as Nagaraj has discussed, it is relatively better placed technically. Derivative side also, we did not see more short build up in Bank Nifty. In fact, there was some long unwinding, and again we have seen some short covering by FIs on Friday in Bank Nifty futures. Put call ratio also moved up sharply, and we have seen aggressive put writing at 47,000 level. So we believe that in Bank Nifty one should be bullish, keep a stop loss of 47,000 and create longs. On the higher side, around 48,300 to 48,500 level is likely to act as a resistance. That is all I want to share from the derivative side. Now over to you, Devarsh bhai.
Is my screen visible?
Yes, it is visible.
Okay.
Yes, it is visible.
Okay. So now I want to talk about our performance for the year and also conclude. Maybe we'll also try to summarize the whole webinar content in Hindi. So first, about the performance of our fundamental recommendations for FY24, April 23 to March 24. 195 fundamental ideas we have recommended. 184 we have book profits, 11 loss books. Loss book success ratio is 94.4%. Average return, including the lost and the first target achieved, wherever it's applicable, 15.5%. So this is over the average calendar days of 86, 15.5 per idea, and total 184 ideas. You can keep doing the calculation. So these are not annualized, this is absolute. So if you were to annualize this, it could be much higher figure. Many winners were identified. These are some of the winners which we have issued over the years. This was compared to, so this 15.5 compared to the last year of 8.7, and this 88 days has come down to 86 days. The success ratio has also improved. Now about technical performance. Largely, most of the recommendations were focused here. Cash trading, 455 trading recommendation with about 2 days of average holding period, 2.2% per recommendation. The 378 positive recommendation, 77 negative, 83% success ratio, 2% every 2 day, and over a 378 recommendations. On e-margin, 185 positive, 59 negative, 75% success ratio, 5% after brokerage and interest charges, 12 days holding period. This 5.5% compared to 2.7%, 2.3% last year, 139 has gone up to 185. So 185 MTF recommendations, 12 days holding period, 5% is the average return. So this is the track record for retail research. Other categories are also there. We have also issued our monthly strategy report in the beginning of the month. I hope you have gone through it. A good explanation about international events and local events is there. I hope you have gone through it. So major fundamental triggers are not there. Next important event will be the June 4th counting of the general election votes and Q4 numbers. Markets are going to consolidate as we have pointed out in the range, and important will be the June 11th to June 12th US Fed meeting, where they will announce the interest rate direction. Many people are expecting a first cut to come in June 11th. So markets are range bound near support. There is a positive bounce on the Friday, and if there is 100-150 point rally from here, it will confirm the bullish bias, and then we can rally another 500 points. That is the outlook. In Hindi, हम पूरे लास्ट फोर्टनाइट में 15 दिन काफी गिरे, सपोर्ट के पास आए, अपवर्ड स्लोपिंग जो चैनल थी उसके सपोर्ट पे आए, सपोर्ट से हमने नाउ वी हैव बाउंस बैक, एक बाउंस आया है अच्छा फ्राइडे, सपोर्ट पे है, और सपोर्ट से अगर हम यहाँ से बाउंस करेंगे, इफ वी गो अप 100-150 पॉइंट्स, यहाँ से ऊपर जाते हैं निफ्टी में, तो फिर एक 500 पॉइंट की और रैली आ सकती है. वो हमारा कंक्लूजन है. बैंक निफ्टी से ज्यादा स्ट्रांग है, बैंक निफ्टी के स्टॉक्स में ज्यादा फोकस है. सेक्टर में देखें तो ऑटोमोबाइल्स और मेटल, ये दो सेक्टर मार्केट को लीड करेंगे, यहाँ पे फोकस करना है. So that's what we wanted to share. Now if you have any questions, we can take them. Depending upon the screen machine you are using, the equipment you are using, there should be a question window. आप उसको दबाएं, वहां पे आपका क्वेश्चन लिखे, we will be able to, we'll try to answer as much as possible. So by the time questions are assembled, we have some time. So Nagaraj, what about bias towards large cap, or we should bias towards mid cap and small cap in next fortnight?
Yeah, thank you, Devarsh. Friends, actually, as I mentioned in the mid cap and small cap segments, we have seen small cap is little bit outperforming this time over the mid cap. I think the small and mid caps are looking positive. They are placed at the support. We have seen previously also, whenever we have seen some good amount of downward correction in broader market indices, they have bounced back very well from the lower levels. This is what exactly I am expecting this time too. We have placed at the support. We have seen some good correction from the higher levels. Now there is a possibility of bounce back. So we have seen some good bounce back in mid and small cap segments on Friday. I'm expecting this to confirm with the follow through up more in these segments. I'm expecting these segments to move on then large cap this time.
Okay. Sanket is asking about gold. So, and also Bharat is asking about Israel conflict, Iran conflict. So whenever there is geopolitical uncertainty, money moves from financial assets into safe havens like gold and other assets like Bitcoin or other bonds. So obviously there was some movement, but now it seems that the lower volatility in the other assets may help equities. Index related technical calls are success rate is low. Ashu is asking, right? Index is relatively a very volatile asset, and as we compress the time frame, so where for index we try to give calls about 1 or 2 days or intraday, it is always going to be a success ratio is going to be lower. Long-term investment, the probability of success is highest, then the positional trading, then the cash trading, and obviously the derivatives. It's going to be always difficult to trade because there is intraday volatility. There is any event which can affect the short-term movement of the exchange. Ashu is also asking about the new index futures launched by Nifty, their names and symbols, and how do you get the performance. So NSE has an index website. You Google it, and there you will find the information about all the indexes which are going to be offered. Nandish, would you like to add something about which new indices are going to be launched in the futures?
Yes, so NSE has 2 days back they have announced that they are going to launch future on Nifty Next 50. So I think as Nifty is liquid, these are the stocks which are in number 51 to 100. So they will be quite liquid and also from the various sectors. So I think that will be a good index to be part of FNO Nifty Next 50. That is going to come from next series.
Okay, so 50 India's largest 50 companies are part of the Nifty 1 to 50. From 51 to 100 are going to be part of Nifty Next 50, and that's going to be traded from FNO from the next series. Rajalakshmi is asking about the energy sector. So energy sector, as long as the political conflict, geopolitical uncertainty is there, crude oil and other energy prices will remain high, and that will help the energy sector. Same is the case with the sugar. Sugar are also bullish. We think that there is going to be a good profitability from ethanol for sugar companies, and that is going to help the sugar companies. So overall outlook for sugar is very high. Stock specific recommendation because on account of elections. So we are not recommending any particular sector because of the elections. But overall, as we have pointed out, we are bullish on metals and other related ancillary sectors in the shorter term. Okay, I think we have answered most of the questions. I hope this has been useful to all of you. Thank you all for joining. Thank you, Nandish. Thank you, Nagaraj. And have a fantastic weekend ahead. Thank you all. We'll close.